Prabir, how can we help you?
Taken a loan from SBI,
Okay.
and while processing the document, some official told me that you need to do SBI life insurance and general insurance for the protecting the home and protecting the loan. Then I asked them, is it mandatory? They strategically just avoided my question. They said it's a guideline. So I need to know whether it's mandatory or not regarding that insurance, life and general insurance. Second question is that it's a reducing in interest rate that is fluctuating. So I have applied that time it was 9.5. Recently I came to know that the government announced it is getting reduced to 9.4. So what is the actual process to get it reduced officially? Because I asked the question to the officials, they said I don't know, we need to wait for the circular, we will be informed. But I'm just wondering. So if you can help me to shed some light on these 2 points. I really very much
Prabir, have you written to the bank asking them to reduce the interest rate on your loan?
No. I've just verbally asked them by phone and meeting them. So what is the process actually? I just need to know. You kindly help me.
Right. So 2 things coming in over there. Let's deal with the the interest rates first. Now we know that RBI announced the MCLR formula. Banks have taken to it, and in fact, SBI had announced its rates as per MCLR. It is around 9.4%, like Prabir rightly pointed out. How can he get his home loan shifted to that interest rate?
Okay, the first thing that Prabir and all the other people, all our other viewers should understand is that the MCLR system is going to be now available to people who start taking loans post 1st April. So it's not to retrospective loans, it's to the new loans, okay? Now, because of this new system, you have the option of migrating from your old floating rate system or fixed rate system to this MCLR based system, for which the banks might have a little bit of a fee that they might charge you. What you must also understand is that what happens in the RBI, what happens in the Reserve Bank, they make a policy announcement. By the time it actually translates to the absolute branch that you are dealing with, it may take some time. Well, technically, we should not give them the leeway, because if a policy measure is announced, it has to be implemented immediately. But well, we give a little bit of latitude based on practicality, and then it might take a little bit of time before people understand it and the messages come down and people start implementing all of that. So therefore, one of your ways, like you've been saying quite rightly, that they themselves are in the dark, so how will they try and advise you? Secondly, write to them, see what happens. MCLR also will get settled down in a little while. They may allow you to migrate to MCLR, but you might have to do a little bit of conversation. That is a little bit of discussion with the bank on that. And see, moving on to your other question about the insurance component. Now, here it is very pertinent to note that when you are getting a loan from a bank or a non-banking financial corporation, they have the freedom to make a few rules. So if you ask me, in my personal opinion, there is no need to have any insurance whatsoever. The reason for that is very simple, that when you are taking a home loan, you are giving your home as a guarantee itself. You are giving that as a security or as a collateral. So God forbid if something happened to you, they already have possession of your property and they have rights to go ahead and sell it also if the need may arise, and then recover their money. But you see, they don't want to do that. No bank wants to really go and sell you a home loan. All they are interested in is that their loan should come back and that their loan should not get defaulted on. So what happens is, as a via media, they get a life insurance contract. It's a very popular thing. It happens all across the world. So this is nothing new. So what they want to do is, God forbid if something happened to you, the liability should also not fall on your family. It should also not fall on your other savings and assets. And which is why it's a good idea that if you have a life insurance policy equal to the value of your home loan, so that God forbid in any eventuality if something happened, the insurance company would straight away pay off the loan and your family would be
what he's
relieved.
telling here essentially is, what RBI has been repeatedly pointing out, and a lot of consumers have also complained about the fact that banks tend to try and sell another product when they're selling one product. This is technically called mis-selling.
Mis-selling, absolutely.
Yeah. So, does he have to buy this product from SBI? Can't he just go out and buy a term insurance somewhere else?
He can absolutely buy term insurance, and if he wants, there is also a facility in life insurance companies which is called an assignment of policy. So if the company is absolutely insistent that they will just not give you the loan till the time you give them an insurance policy or buy one from them, you could actually buy your term plan from whoever you want and have that policy assigned in the favor of that institution, so that the bank has adequate or double security, your loan, your property plus this insurance.
Karthik, we have another caller on the line, but before we go there, quick question. Is it cheaper for him to buy this insurance from the bank itself?
Not necessarily. Online is obviously going to be the cheapest. Any agent selling it to you is going to be like a little bit more expensive because there's a commission involved in that.